This is a graph kind of showing you guys. So this is the 2008 crash. Our inventory got up to 55,000. So it seems like every article online right now is talking about how Phoenix real estate's going to crash 30 to 50%. 2023 is the recession crash coming. The housing bubble is about to burst. And we're having all of this fear-based stuff out there. So I'm going to try to slow it down for you guys today. We're going to look at the real data of the actual MLS numbers, what's actually happening out here with prices, with inventory, with closed deals, with pending deals. And let's actually take a look into the real data and kind of assess something from there. If you guys don't know, my name is Andy Briggs. I'm a real estate agent out here in Phoenix, Arizona. I'd love to get with you and talk to you if you're looking to buy, sell, relocate, or anything out here in the Phoenix Valley. So if you have any questions, I'll put my contact information down below. And with that being said, let's go and hop into it, all right? So it seems like everybody out there is talking about the 2023 housing bubble bursting. Obviously, the Fed has raised rates. We're seeing interest rates starting to climb back up towards 7%. I'm going to kind of talk about some of that stuff a little bit later. Also talk about like the renting versus buying aspect. But first, right here, this is actual data from my brokerage. I'm an agent over at West USA. So let's pull the other one back up. So this right here on the top, you can see this. So right now, we're up at 79 days closed days on market. 79 closed days on market is the average amount of the time it's taking to sell a property right now. So last year, this was down in the 20s. I'm pretty sure for a couple weeks it was averaging around 30s closed days on market last year. So we are more than doubled that. So properties are definitely selling a lot slower. Obviously, we have right here a 4.16 month supply. It's a little bit high, right? Last month in January, that was as high as like 4.8 months supply. So we'd like to see that a little bit lower. Obviously, you've probably seen some stuff. Phoenix inventory is up about 300% from last year. So there's a lot more inventory available right now, about a 24% absorption rate. Average list price is $748,000. Average sale price right here is $507,000. So that's with all the $1 million plus properties coming into this. Over on the right side right here, this is 96.83% list price to sale price. So that means that sellers are starting to give away more. They're coming down on their actual list price to the actual closed sale price. They're giving out more concessions and stuff like that as well. So if we come down here, you can see in January, there was 4,300 closed units. That's down 15% from December, and that's down 38% from 2022. So there's a lot of slowing down in the market, obviously. That's why the inventory is going up. We're selling less units, so a pretty basic understanding of all that stuff there. If you look over here, though, this is a big thing. So we have 56% of our inventory is coming from houses that are below $500,000. So 56% of the inventory is from $5,000 and below. You got 31% in the $500,000 to the $1 million range, and then 12%. So this number is starting to creep back up. This can get as high as 60. It's been up as high as 70%. So we're getting a lot more inventory in that affordable range where the median sales price is for a lot of people. So we're starting to get more inventory here. Closed days on markets going up, and we're having a slowdown. So these are all the things that you're kind of expecting to see out here. The actual amount of sell-off that we've had, we'll talk about that in a second though. So there's a little bit more data right here. It's a little more in depth. So you can see here in February, we've taken 1,869 new listings right here. You can look over to the right. Last week was 2,000 new listings. Same week for last year in 2022 right here, and then same week for 2021 right there. And then if you look over to the right a little bit more, January of 2023, which was last month, we took 7,839 new listings, whereas in 2022 we took 9,000. So this is a little bit of a slowdown. Right here, 2022 we had 4,900 new listings in December, whereas that's for 2022. 2021 we had 7,098. So we're obviously taking less. Relative to that, there's a lot less people wanting to sell their houses. Obviously, if they sell their house, where are they going to move to? They're going to have to get an interest rate mortgage or a higher interest rate mortgage. So a lot of people are not selling. So there's less new inventory coming in, but also the current inventory is not selling. So that's where we're getting the buildup, right? So currently right now, we have 16,200 active listings. So this number is from the 13th of February. Today's the 16th. So actually we're closer to 16,000 right now. So we're in the middle of February. Around December when we had the winter holiday months, we were closer to 20,000. So recently, we had a little bit of a drop on the mortgage rates. They got down towards 6%. We had a little bit of an uptick in buying volume. I can show you real quick on just this right here. So this is ticker TNX. This is a 10-year treasury right here. So right here, obviously, this was October 21st. And then the rates kind of peaked out just over that 7%, right around that November 5th date right here. We had this little bit of a pullback here, a little bit of a bounce. Rates went back to like 6.5%, and they came back down towards 6. And now the 10-year Treasury is starting to creep back up. We'll see if it can break over that little level right here. And if that does, interest rates, we might start seeing interest rates going back towards 7%, maybe north of 7%. So that would probably imply that there might be a little bit more of a slowdown in sales price, or a little bit of a pullback in sales price, right? So we can see here 4,097 pending units right now. Last week that was 3,900. So a year ago we were at 5,000. 2 years ago we were at 5,900. So kind of like a healthy number we talk about is 5,500 over here, around 5,000 pending units. So we're a little bit low on pending units right now. So if we don't have enough pending units, that's going to let inventory creep back up. If we look a little bit lower than that, 1,600 closed units right here. Last year there was 1,700, and then in 2021 there's 7,300 units closed. So it's been a little bit of a slower month, right? Last year was a little bit slower. 2021 was a very busy month. If we look over here to the right, in January of 2023, so last month we had 4,300 closed units versus January of 2022 we had 7,100 closed units. So that's a 38% slowdown, right? So we're having a pretty big, about a 40% slowdown in closed units. You can look over here in December, it was 5,100 units. So then January was 4,300. So now we are starting to see a pretty significant slowdown. So that's creating more inventory. So our inventory supply is 4.91 months last week. This week we're at 4.16, so we had a little bit of an uptick in buying volume, but we're still sitting over 4 months. We'd like to see that number around 2.5 months supply of inventory. That's kind of a more healthy number. If we can get 2.5 months of inventory, about 5,500 pending contracts, and about 20,000 active listings, and we want to get new listings, about 2,400 new listings also. So that's kind of the numbers of what would be a healthy market, so to speak, or a more traditional market, right? So with all these things being said, right here we're showing our average sales price around $507,000, down from $523,000 last week. So you can see that was about a 3% drop just in the last week. And then if we come over here, we can see that our median sales price right now is $410,000, down from about $470,000 back in May of 2022. So 470 minus 410 would be 60. If I go 60 divided by 470, we're actually down close to 13% from the actual all-time highs that we had in 2022. So just coming back to this real quick right here, we'll finish up on this one and we'll move forward. But you can see down here towards the bottom, we're at 96.8% list price to sale price retention. So what that means is that essentially if you listed your house for $100,000, the house would then close at $96,830, which means that sellers right now are coming back on their what price they're actually accepting on their house, right? So they're coming back on their list price to the actual closed sale price, and they're giving more concessions. So they're doing rate buy downs, they're doing more fixes, they're doing closing costs, they're doing a lot more to try to secure a closing, right? So sellers are giving a little bit too much. So just to give you guys the healthy numbers, this would be like over about a 98% would become more healthy. So you can see where the numbers are. We're obviously not at the 30% crash yet. So just looking at this kind of data, I'm going to start sharing this stuff weekly with you guys. This is the data that we're looking at. This is the data that we're seeing. There's obviously been a slowdown, but when you can actually see the week-to-week stuff, what's actually happening, it makes a little bit more sense than just watching the videos where everyone's just kind of, trying to put fear out there. So if we come back into here, this is a graph kind of showing you guys. So this is the 2008 crash. Our inventory got up to 55,000. It was sitting over 50,000 for a few months there. So right now we're at 16,000. In December, we got up to 20,000, so we're not really anywhere close to that level yet. Obviously, foreclosures are starting to slowly uptick. I think foreclosures are up 100% from a year ago, yet there's only 23,000 foreclosures in the whole United States, so we haven't really seen that total foreclosure volume coming in like some people think. Obviously, there's been a lot of tech layoffs, Amazon, Google, Twitter. Goldman Sachs is starting to lay people off as well. So there's a lot more layoffs happening, so we'll see what the next few months hold for us. Obviously, if interest rates continue to go up, it might slow down inventory more. We might see a price pullback more as well. But I mean, if you're in the market for something, it's good news for you, right? So you might not be buying this week, but maybe next month or 3 or 4 months. It's a good sign for people that have been trying to get into the market, but they've been kind of, pushed aside by all the cash buyers for the last few years. So the green line right here is the average sale price, the median sale price, I'm sorry. So you can see it really started to take off right here through 2020. So 2020 starts right here. And then it's kind of went from 290 up to 475. So it was a pretty big jump. We had like 30% appreciation a couple years there through COVID and stuff. And now we went from 475 down to 410. So we're still pretty high over what 2019 was before the, before the pandemic and all that kind of stuff. So there's still a little bit room to come down maybe here. There's been a lot more people offering, 10% below list price offers out there. There's a lot of lowball offers, and just depending on how the seller is positioned right now, sometimes a lowball offer might get accepted. So there's a lot of opportunities out here. I think going forward there might be more as well. But just looking at this, you can kind of see that the blue line down here is our closed sales. So our closed sales are at a very low level right here. They haven't been this low in 6-7 years actually, probably. But obviously they slow down towards the end of the year every year. February, January is kind of like the low months every year. So we're at that low point right now. We'll kind of see if we get that uptick going back into the spring to summer months here. There's a little bit of an update for you guys, so you can kind of actually see the real data. Obviously, the prices are down about 13% or so on the median price. Some of the higher priced inventory, like some stuff over $600,000 to $700,000, some of those are maybe seeing 15%, some stuff closer to 20%. But the median price, if you're below $400,000 right now, you've been pretty stable. There's been a pretty big buying pool in that less than $400,000 range, just because that's what's more affordable now, right? So you used to be able to buy a $600,000 house for what a $400,000 house is costing now, right? So some mortgage rates are up about 50% for what it was about a year ago. So quick update on the actual real data. I know there's a lot of fear out there. So when you look at this, it's a little bit different looking, right? You can kind of start to say, okay, maybe it's not as bad as everyone's showing. There's a few people out there that are sharing data, and I'm not saying that the data is wrong. It's just for when you live in the actual city, you might see different stuff than what Redfin shows or what Zillow shows, because their market information is a little bit different sometimes. Sometimes it's Phoenix specific versus being the whole metro Phoenix, like so Glendale, Peoria, Scottsdale, Tempe, all that stuff is kind of like the metro Phoenix area, and sometimes that data is not all included in there. So stuff like this is saying, is it cheaper to rent versus buying right now? This is saying that it's 43% more expensive to be buying right now than renting. So that's $800 difference, right? And I would say that the rent is, you can get stuff for $1,900. If I look here, this is the average rent in Phoenix, Arizona. This is saying $1,581, so $1,600, but that's for an 800 square foot apartment, right? So if we're looking at this right here, I think the median sales price is about $410,000 for about a 15 or 1600 square foot house, right? So when you're looking at this kind of stuff, it's what are you renting versus what are you buying? So I kind of went on the MLS myself, you guys. So this right here is current data. Today's February 16th. There's 15,981 active listings. So there's 16,000 active listings on the MLS. Right here, I have a filter typed in. So this is for for rentals that are available in all of Maricopa County at below $4,000 a month rent. So I've got all the rentals available. There's 3,937 rentals available for less than $4,000 a month. If I come down here, the median rent on a 3-2 with 1,500 square foot is about $2,350, right? And if I come here, I have a filter set up for $100,000 to $500,000 units for sale. There's 8,400 units for sale below the $500,000 mark, right? If I come in here, I can see that once this loads, we have a median 3-2, 1,600 square foot, list price at $381,000. So if you get a $381,000 property, say you close on it there, interest rates are about 6.5% right now. You're sitting in anywhere from that $2,500 to $2,700 range. So yes, it is a little bit more expensive to be buying right now. But one of the big things to talk about though is that we've had a housing shortage, right? We've been in a shortage for the last 10 years. They haven't been building enough. So some projections out there are saying within the next 5 years, rents that are averaging right now $1,600, average rent might go upwards of $2,600 or $2,700 per month to rent a place, right? So if you're looking at it in the sense of it's cheaper to rent right now, but going forward, if rents continue to go up, that's that age old, concept of your rent's going to stay the same if you have a mortgage, right? So depending on where you're locking a mortgage in right now, obviously if rates do go back down later this year or maybe next year, you can refinance. But currently right now, just where things are sitting, yes, it's a little bit cheaper to rent, but at the same time, looking down the road as things are growing out here, as interest rates continue to go up, as inflation is still sitting high, right? Inflation came out a few days ago. The CPI was running hotter than expected, so that means that inflation is not coming down like they wanted it to. So that might mean that Jerome Powell might have to raise rates more than expected the next one up here. So looking at the data, you guys, this is a little weekly update for you to kind of see what's going on. Like I said, inventory has dropped a little bit since December, but it's up multiple hundreds of percent since last year. Our average sale price is coming down about 13% since it peaked out in May last year. We got interest rates starting to creep back up, right? So right here, this is the 10-year treasury. This is starting to look like it's got a little bit of a pop to it. It's found support. If it was to come back up, if we zoom out a little bit right here, this is zooming out. This is back to on the left side of the chart through here. This is 2002 down on the bottom. So you can see the 10-year treasury was pretty high around 2000. And then, so we have interest rates, the highest that they've been in 20 years, right? So it's a culmination of a lot of things. Sometimes it takes a minute to slow down, look at the data, kind of understand what's going on, and then make an assessment going forward what's going to be best for you. So if you guys need help, if you want to talk, like I said, my name's Andy Briggs. I'm an agent out here in Phoenix. I'd love to chat with you. My information is down below. Reach out to me with any questions you guys have, or even if you're not trying to buy a house right now, maybe if you just want to rent for the next few months to try to figure stuff out, or if you're moving into town and need help finding a place to live, let me know. I'd love to chat with you. Hopefully this video helped you guys. If you could like it, that really helps me as well. If you want to comment down below where you're looking or when you're moving out here. If you want to subscribe to the channel for more updates and information like this, click the subscribe button down below. And you guys have a wonderful day. We'll catch you in the next one. All right.